This week on Newsmakers, Congressman Patrick McHenry, Republican of North Carolina and chairman of the Oversight Subcommittee on TARP, Financial Services, and Bailouts of Public and Private Programs. Here to help us with the questions, Neil Irwin, Washington Post economics reporter, and Stephen Sloan with Congressional Quarterly, also economics reporter. Stephen, you have the first question. Go ahead.
Yes, Congressman, thank you for being here. There's a lot of concern about the position that states find themselves in right now with their deficit and their debt. And I'm curious how there's a lot of talk about whether they'll have to come to Congress for a bailout. You have a subcommittee that's going to look at these issues. How do you plan to approach that subject?
Well, I think it's important that first we understand the magnitude of the problem and the fiscal situation of states and municipalities and whether or not they have the tools currently at their disposal under current law to fix these problems. I mean, I think we're all aware that there are challenges, but the magnitude is really the question. And so a lot of ideas have been bandied about, but I want to make sure that we have a series of hearings and a baseline of knowledge about the problem and then the potential solutions. So that's what I intend to do with the subcommittee that I have a pleasure to serve on.
And the potential solution here, I mean, are we talking about a legislative solution possibly?
Well, possibly. I know we've got this idea of state bailouts versus state bankruptcy, but I don't think this issue can be boiled down into just those two issues. Congressman Devin Nunes of California has filed legislation that would force states to provide more transparency on the assumptions they make about their pension plans. That could be a potential legislative solution so that the bond markets can make better judgments about the liabilities, unfunded liabilities at the state level. But that's the type of thing we need to really hear from the experts about and get a baseline knowledge.
Well, to be more precise, do you envision having a conversation about the idea of a state bankruptcy process so that states that find themselves in deep underwater can go through a legal process to deal with those debts?
Well, I'm not convinced it's the right answer. However, I don't think there's been enough research done on whether or not bankruptcy would be costly to the states in terms of the states that have said that states that are in fine fiscal shape, whether or not they're going to pay a lot more in lending costs because this is on the books, versus the states that, well, the bond market's already priced in that they're in very bad fiscal shape, whether it's Illinois or California. But I'm not convinced it's the right approach, but I think it's something we're going to have to discuss and better understand. I do know, and I can say this for certain, that this Congress and the majority that I have a pleasure to serve in the U.S. House has no appetite for a bailout of any kind for the states. That's the only thing going into these hearings that we know the answer already.
But just by having this discussion, even before we get to the legislative possibilities, does that, I mean, it raises concerns that it could create more jitters in the bond markets working with these states. How does that play into how you plan to hold these hearings and proceed with this discussion?
Well, it certainly plays a role, but I think we've seen markets not accurately price risk. I think we've already seen credit rating agencies make mistakes and in failing to accurately disclose risks. But beyond that, just this discussion, we've seen one of the credit rating agencies come forward this week and not only describe the credit rating, but also for the first time mention the unfunded liabilities of state pension plans. So this discussion could originate in the private sector demanding more disclosure rather than Congress legislating it.
And with those credit agencies saying that they're going to put funded or unfunded on the books when they take a look at a state situation, that could raise their debt up significantly for each state. Do you plan to take a look at credit agencies and what they're doing?
I think whether you look at the Financial Services Committee in the House or the Oversight Committee and my subcommittee on the Oversight Committee dealing with financial service-related issues, we're going to look at credit rating agencies. If you look at the Dodd-Frank bill, if you look at what's happened in the last 2 years, I think in the federal crisis, the Crisis Inquiry Commission's report, The credit rating agencies certainly bear some of the blame, or a significant amount of the blame for the last crisis and not accurately disclosing these risks. And so, I do think that they need to have a good look, and I do think that we need to hear from them as well as analysts that are saying that the credit rating agencies aren't accurately pricing risk in the bond market.
Congressman, your committee will be looking at TARP, the financial bailout that was enacted in the fall of 2008. It's been in existence for 2.5 years now. There's been a special inspector general kicking the tires, looking into it, a congressional oversight panel. What might you guys have to add? What sort of oversight are you looking to do that has not been done thus far?
Well, Neil, that's a good question, because I've heard this discussion before, and much has been written about TARP, and much has been written about the bailouts. And if we look at the Crisis Inquiry Commission's report, it's fascinating that much of their report is really a clipping service for the work that you all have done writing about economic policy. And so much of the product has been written about in book form, has been written about in newspapers and journals across the board. There is that nice baseline. But there are certain questions that haven't been answered, and certain things that are ongoing that are of major concern. And I'll give you just a couple examples. First, HAMP, the Home Affordable Mortgage Program. The Special Inspector General for TARP has called it a failure. Even by the Obama administration's original measurement of helping 3 to 4 million homeowners get resolved and so they can stay in their home, it's fallen far short of that, only helping about 500,000 people. Certainly good for those 500,000 people. But there have been hundreds of thousands, over 700,000, who have gone into this program and actually been hurt by it. They're worse off than if the program never existed. That's one example of a major failure within the TARP program. Secondly, some of the decisions within TARP. For instance, the new creation of this small business lending program. In essence, it's going to buy small banks out of TARP and take them into a separate program. By the design of this, the Special Inspector General believes that it's simply a way to buy them out of TARP and TARP oversight, and so they can go and die somewhere else, and it's not on the TARP books. That's one example of intent of Congress to help get small business lending going through small banks that by its design is fundamentally flawed, and we have concern. We need to have oversight of that. But there's so much more going on in financial services, as I read from you all and as we pay attention in the news every day.
So we'll talk about some of the specifics in a second, but
Sure.
Do you want to relitigate the basic question of should there have been a financial bailout? Was that the right move back in October of 2008?
No, I don't think we can relitigate that. I think everyone is pretty locked in on their perspective, and I don't think there's any reason for us to go back at it in that fundamental question. Look, I've had my opportunity serving on the Financial Services Committee and the Oversight Committee to ask those questions of Bernanke, Paulson, Geithner. We've heard from them all. I think people have pretty made up their minds.
But it sounds like there is an effort to relitigate Dodd-Frank and go forward and change that law. What do you plan? How is that going to go forward?
Well, I don't think it's relitigating it. My vote against it is there on the books. I mean, I've already registered my opposition to it. It's now a question of the implementation. And when you have hundreds of regulations that are yet to be written, when you have the Financial Stability Oversight Council with just their third meeting, and when they're outlining their judgment on what is systemically important, and then you have the Inspector General for TARP issuing a report of the city bailout, and Secretary Geithner saying, well, when the next crisis comes, it's going to be, we're going to have to sort of make a gut decision, in essence, is what he said. Perhaps what we're finding with their initial findings of this first meeting, Secretary Geithner's sort of candid comments, if you will, that it is entirely possible that this Financial Stability Oversight Council will not be able to judge, based on rules, what is systemically important. And they're just going to go back to an ad hoc sort of bailout. We'll know it when we see it, which is what we faced in the last crisis, which is what Dodd-Frank was intended to avoid. I'm saying a lot here, but But the concern is that the implementation is correct, and that when you get down to it, that we're not going to further restrict lending for individuals, and that we're going to have a competitive, vibrant financial marketplace.
But we're not talking about getting rid of the Consumer Financial Protection Bureau or dialing back derivatives regulation, things like that were centerpieces of the legislation?
Well, the derivatives piece is whether or not the end user exception is worthwhile. I think there can be some discussions about that. And the way that you implement this derivatives regulation is pretty significant. It can have a pretty major impact. But the CFPB, I think you'll see some, or whatever they're calling it today.
Consumer agency.
Yes. But, you know, there is a concern there. I mean, obviously, Elizabeth Warren has quite an operation she's created for herself in Treasury to get this up and running. And I'm not sure, aside from, you know, I'm not sure the structure of that. There's not been much disclosure about it. So I think we'll have proper and necessary oversight of that on the Financial Services Committee and on my subcommittee as well.
You mentioned HAMP. You co-sponsored legislation on Friday that would prevent Treasury from continuing that program. This is a program that's supposed to help further modifications for troubled homeowners. Most people agree that this didn't work out the way it was intended, but the question is still, how do you help these troubled homeowners that can't make their mortgage each month? If this isn't the answer, then what is?
Well, first of all, you know, the reason why we filed legislation to end the HAMP program is because the Treasury hasn't listened to constructive criticism in the last 2 years, either bipartisan criticism and even nonpartisan analysis that this program's a failure. And I mentioned earlier about the impact it's having on individual homeowners. It's been largely negative. So ending it is the first step. Really, when you get down to home ownership, the reason why most Americans aren't able to keep their homes at this point is based on the economy. With close to 10% unemployment, much higher than that in my district in western North Carolina, that is the root cause of folks losing their home right now. So the economy moving forward is going to be the best net plus for housing and home ownership, much more than any one government program.
If that doesn't happen, though, in the next year or 2 years, and these gentlemen can speak to it more than that, I mean, the predictions are that we're going to see high unemployment rate for a while, then what's the alternative? Well,
that's what we have to have discussions about. And going in, realizing that this program is a failure, I think stopping the wrong direction is perhaps the first step. And then we can work out what is the proper.
Do you have some ideas, though? Because I think, you know, viewers out there, Americans are you're in charge now, want to hear what the alternatives are.
Sure. Look, you know, working with servicers has been what the Treasury has done. They haven't put, in my opinion, they haven't put the proper incentives in the marketplace to get workouts going. But when you get down to it, you're still talking about a contract. You're still talking about honoring a contract, and that's been sort of the sticky wicket of how to make this program work. I acknowledge that. And there are no simple answers when it comes to this housing crisis. But the fact is, how do you work out an individual's mortgage who doesn't have a job? There's simply no way with any type of reasonable underwriting standards to say, well, we'll fix your mortgage if you're still not able to meet any obligation because you have no income. So, you know, when you get down to it, you know, the largest causes for losing your house have been historically losing your job or a change in your living situation, whether it's a health issue or a divorce or things of that sort. Those have been the vast majority of foreclosures. Beyond that, what we've seen in this last crisis, most of the fraud has been sort of worked through the system, and I think the foreclosures we're dealing with now aren't fraud-based or lending that was ill-fit to the individual. I think it's largely the economic situation, and that's really what we have to deal with.
And it sounds like the bottom line, though, is that if you don't have a job, it's hard to modify your loan, and maybe there's still a section out there of people who if they can't afford to stay in their home, should just go into foreclosure. Is that your view here?
It's an awful thing to say, and there are far better ways. But if you don't have a job, no program is going to help you as much as a job would help you, and that's what we have to face. But beyond that, I think there are ways that we can work and make sure this program does work going forward.
Do you envision looking at this question of whether mortgage servicing companies have major systematic mistakes in how they deal with people and deal with borrowers?
We're going to have hearings on HAMP, and we're going to hear from those that have been helped and those that have been hurt, and what's actually happening in field hearings. So we're going to go to the crisis centers, and we're going to hear from folks firsthand. And there are positive cases. There have been 500,000 people who have been helped by this program. Again, it's not a large number based on the fact that we've got close to 3 million foreclosures this year and last year, each year. So there's a lot more going on out there. Certainly, they bear enormous responsibility for the failure of this program, but the fact is the Treasury is still writing the checks, even though the companies aren't following through.
We have about 10 minutes left. Neil, did you have a follow-up?
Well, back on Dodd-Frank and the regulatory reform, financial regulation legislation that passed last year, some on the left would argue that what Republicans are trying to do is undermine make it easier on banks and make it give the financial industry more of what it wants and a softer touch out of regulators. How do you rebut that criticism? Is that what you guys are up to?
Lord, no, absolutely not. Look, if you look at what the banks wanted the TARP and the banks wanted the bailout. I have voted against that. I mean, so this idea that Republicans are in favor of the banks and Democrats are in favor of the little guy isn't really the truth. So I would say the reality of the situation for me is I'm not as concerned about the regulators or the institutions. I'm concerned about my constituents and their access to credit. And if you talk to a small real estate developer who has very little debt, but what debt he has, he's paying on time, and banks are coming in and saying the regulators are on my back, and so I've got to change your loan terms, or I'm not going to extend your credit. So who's right here? Is it the bank or is it the regulator? And this question's been asked by my constituents, both with individuals with loans with banks, small businesses with banks, and even large businesses trying to get lending in the marketplace. And the banks are saying one thing, the regulators are saying something else, and I don't know that I believe either one of them. But when you get down to it, my constituents don't care which one it is. They just want an answer. They want to know what's happening going forward and what their lending situation is. What I'm looking for is a vibrant lending market with real competition against, banks and credit unions and financial institutions of all shape, form, and size. And when they compete and there's a vibrant credit marketplace, my constituents win and small businesses win, and I think that will help the economy grow. I want to get to the bottom of this question, whether it's the banks or the regulators that are causing the seize up in lending, or are we just in a natural business cycle? That could be the answer as well. That's why we have hearings. And I know you guys have covered the Hill, and C-SPAN obviously covers the ins and outs of the Hill, but going into what I'd like to see from my subcommittee over the last 2 years is to ask real questions and see where the facts take you. To not go into a hearing and say, I've structured the hearing where I hear X answer, but to actually go in and say, what should the approach be? What is the problem? What is the answer? And really let the facts take you where they may.
You chair a subcommittee on the House Oversight and Government Reform Committee. You're a vocal member of the House Financial Services Committee. And I guess both of these committees are investigating similar things. And how is the coordination going to work? So you're having hearings that do explore these topics that you're looking at, but they're just not, 12 hearings on TARP, 12 hearings on Fannie and Freddie, just kind of constantly, hitting the points. How's that coordination going to work?
We'll see. We're just in the first month of the Congress. There's plenty of room in this financial service segment So much of what's happened in the last 2 years has been related to this issue. And the Financial Services Committee, Chairman Backus has outlined that he wants to go through provision by provision of Dodd-Frank, see what works, see what doesn't work, and follow the regulations. So I know that most of that's going to be done on the Financial Services Committee. We also have this state bailout question and the larger question of whether or not states and municipalities are going to come to the federal government and ask for our taxpayer dollars. And I want to set the stage for that and understand the situation before that happens. Secondly, we can go into a whole question about securitization. What does that do for small businesses? What does it do for small banks and accessing credit in a wider marketplace to give community lending? And what does that mean for home loans, car loans, and running the whole gamut? There's a question about the credit rating agencies. These are things that we can get into, the meat of, the substance of, in a very in-depth way and have a long series of hearings and really dig in.
Will you do the same on Fannie and Freddie?
Well, Fannie and Freddie, certainly. I mean, and what you'll see out of the Financial Services Committee, where I'm able to work on this issue as well, is understanding what's happening in the homeownership marketplace and the lending marketplace, and understand the cost, which we now know is around $150 billion, the losses to the taxpayer for Fannie Mae and Freddie Mac, and the fix, the legislative fix. So much of that will be dealt with the Financial Services Committee because we're going right into writing legislation on that. And so I want to take some of these wider range issues like securitization, like these state bailouts, and get into sort of the nuts and bolts of it.
Congressman, one thing that's hung over a lot of these answers and a lot of this conversation is the weak economy. And if the economy were to get a lot better, that would help the foreclosure issues, that would help the state financial issues, would have a lot of benefits on all these things we're talking about. We just found out Friday that GDP rose 3.2% in the fourth quarter, which is a little better than it was, but not great, and won't bring joblessness down very quickly. All that said, what is the Republican Congress going to do about the economy and jobs? Is there anything that you guys have cooked up for this next few months to try and address this problem directly?
Well, we believe that the massive expense of the federal government has hurt the economy and has hurt job growth. Certainly the top-line GDP numbers, we could just sort of do more quantitative easing, we could do more deficit spending, and perhaps the numbers might be sort of gamed for a quarter or two. What we want is long-term sustainable growth. And the way that we believe that happens is by constraining government, by cutting spending in Washington, and allowing, which over the long term will keep interest rates lower, give folks better access to credit, and over the long term reduce our tax burden as well. So certainly the extension of the 01 and 03 tax cuts was beneficial to the economy, I believe. And certainly us repealing Obamacare will have a helpful impact going forward on economic growth. That's what I believe. And that's what a majority of my colleagues in the U.S. House believe. And that's why we voted to repeal Obamacare. Those are some of the issues. But you also see the regulatory burden of this administration. Over the last 2 years, we've had hundreds and hundreds of new regulations written that have billions of dollars of impact on the economy. That's before you talk about the implementation of Dodd-Frank and Obamacare. So we want to look at those regulations and make sure that we alleviate and remove some of the burden in the private sector, which we think will help with job growth as well.
The Financial Crisis Inquiry Commission released its report, actually 3 reports, on Thursday, and I'm curious, I mean, people kind of took different directions, kind of got to the same endpoint, but in the end here, was this a lost opportunity to really get to the root of the financial crisis, and is there anything you can do on the Oversight Committee to fill in any gaps? Well,
the analogy when this commission was created was to the Pecora Commission in the Pecora investigations of the 1930s, where it was a unified narrative of what caused the Great Depression. That narrative persisted and still persists to this day. Over 70 years later, what we say about the Great Depression is what Pecora outlined. And as a result of those, that investigation, those recommendations, you had the Securities and Exchange Commission. You had Glass-Steagall implemented. You had direct legislation resulting from that investigation. This is going to be a meaningless blip. I don't think 70 years from now we're going to be talking about the FCIC report and what Angelitti's his narrative of the 6 Democrat appointees, or the three dissenting Republicans that wrote one report, and Peter Wallison, who wrote his own report. To me, analyzing this, it was a missed opportunity. The idea is to truly understand the crisis and then legislate based on accurate information. I think that's what the American people want. And that's the type of inquiry I'd like to have on the state bailout issue, on securitization, where we can actually have some agreement. These things aren't really shirts versus skins, Republicans versus Democrat issues. It's really what's best for the average person in this country today. Their ability to access credit, their ability to ensure that their taxpayer dollars are safe and secure, that we won't have bailouts going forward. So I think it was a missed opportunity, sadly.
Probably have time for one quick question.
Any thoughts on just the adjustment to being in the majority, what it's like for you personally, and what it means to have greater stakes around what you and your party do as you become the majority? Wow,
it's a world of difference. I mean, it is pretty dramatic. Obviously, being in the minority in the House, you're reacting because if you have the majority, you can set the agenda. So agenda setting is a challenge. And this first month of being in the majority, it's a lot of work trying to figure out what you're going to be doing over the next 6 months, over the next 2 years, and the type of work you would like to do and the work product you want. But it's been great on my subcommittee. I've got a ranking Democrat, and we've had good conversations about the work that we would like to do on the subcommittee. So, yeah, there are real opportunities. It's an exciting time to go into the majority. Certainly the challenges for the country are enormous, but the good thing is we've got wonderful capacity, both with American people and the folks serving in Washington that want to do the right thing, and my hope is that we can.
Congressman McHenry, thanks for being our newsmaker.
Thanks so much, Greta.